Saros is this extremely odd cryptocurrency. In the last years, the altcoins tended to go up. Saros, though, appreciated by 32,000%, much more than any other altcoin in the top 100. The question is why? Who is buying here? Who is selling here? How much more potential upside is there? Let's have a look at the on-chain data, the data most people are not considering. Now, this is last year's performance on a chart. It's going straight up and we are close to the all-time high. Even in the last month, the price of Saros went up by almost 67%. And now we tend to go sideways. Is this potentially an opportunity? Let's have a look. Now, first of all, Saros is a dynamic liquidity market maker. So there's a spot market and there's a perpetual futures market. It's based on the Solana chain. And some of those liquidity pools have very attractive APYs. Have a look at this. In the last 24 hours, the USDC to USDT trading pair annualized generated 1,100%. And it looks like the team is trying to push up the price even further because recently there was an announcement that the foundation is going to buy back the token. So that was published yesterday. Saros Foundation announces Saros buyback program after a huge initial purchase of 100 million tokens. There is some data though that doesn't really add up. For example, when we look at the trending tokens on Solana, Saros is not part of them. We cannot find the token anywhere here, despite looking at the most liquid tokens on the chain. In fact, the trading volume on chain is pretty much non-existent. There was $99 worth of trading volume in a liquidity pool of Meteora and another $110 on Radium. It's pretty much not a single transaction. And that's all happening while apparently the token is quite popular. This is the X platform, formerly known as Twitter, and there's almost 100,000 followers of Saros. Among them, Sam Bankman-Fried, the founder of FTX that's now in jail. Still, the token has less than 9,000 holders on the chain. What's going on here? Those numbers don't add up. Now over here, we see the number of retail investors versus whale investors over time. The way you make this distinction is by looking at how many tokens are held in a particular wallet. So to be counted for the chart on the left side, a wallet has to hold at least 3,000 Saros tokens. Now at the current price, it's roughly $1,000 worth of the token. In the middle, it's 30,000 tokens. On the right, it's 300,000 tokens. We can see how none of the wallet cohorts is constantly accumulating. Especially retail seems to not be interested in the token and tends to rather sell since beginning of the year. The whales, however, they might be purchasing, but there is a lot of volatility in that chart. The usage of the platform has seen a steep increase recently. This is the total value locked of the Saros protocol. Or how much capital is currently in the different liquidity pools and in the staking programs, etc. This was non-existent in the past. Now it's a bit over 30 million. That's still relatively small for a DeFi protocol, especially given the current market cap. The trading volume did go up quite a lot recently, but the liquidity didn't follow. And that's what's causing those high APYs shown just a moment ago. It's really hard to figure out where the actual price discovery happens for the token. Because according to CoinGecko, the most liquid of all of the places was Gate.io with only 3.7 million worth of liquidity, or should I rather say trading volume in the last 24 hours. In the perpetual futures market, we also don't see that much trading volume. There's a bit on Maxi with 4 million in the last 24 hours, but that's it. Most perpetual futures traders are betting on rising prices, so the longs have to pay the shorts in order to bet with more leverage on the positive price development, and the open interest is going up, so the amount of bets on the price. But still, there's only 25 million so far. And of course, as there is more leverage in the asset, the price tends to go up as well. And one might make the argument that because leverage is increasing recently, the spot price can go up despite retail not buying. But maybe it's just a few whales that are also accumulating more and more of the token. Still, this isn't happening too aggressively. The trading volume on the perpetual futures market is not spiking. And sometimes we get the occasional short squeeze where the shorts get liquidated when the Saros price is going up. Really, it's not really clear what's going on. The price is getting higher and higher, but we don't really see any accumulation on chain besides potentially a few whales. The team is obviously interested in pushing up the price higher. That's why we got this announcement of the buyback. But the fully diluted valuation is already at 4 billion. The market cap is currently at 1 billion. The tokenomics really aren't that great. There are a lot of tokens that go to quote-unquote community development and investors and strategic reserves and core contributors. So the team is keeping a lot of control of the supply. And so here's my impression. I think that the price is getting artificially inflated through those buybacks, through those purchases, through those positive news, to then afterwards potentially dump on retail. Because have a look at this. The token will see a lot of unlocks in the future. And if people now have a higher reference price, if people think that Saros should be valued in the billions of dollars, not just in a few hundred million, it's easier to offload larger quantities, either on the open market or potentially through over-the-counter deals. So the exit liquidity might not even be your Joe Schmo. The exit liquidity might be institutional investors that buy Saros at a discount over OTC and then offload later down the road. Here is Saros relative to Solana over the long term. We did see movements to the downside in the past. I don't think it makes sense to take on that risk. Yes, currently the price is getting inflated, but at some point this will turn around and likely we are going to see 50, 60, 70% declines in the future again. The usage of the platform simply doesn't justify billions of dollars in valuation. This is a drop of 96%. Are we going to see the exact same kind of drop in the future? I'm not sure. But is 70 or 80% possible? Yes, I definitely think so. In the end, there's only 30 something million dollars of total value locked, and there's even less than 10,000 holders on chain. And there's pretty much zero liquidity on chain. There's no trading happening on Solana. Now, I'm trying to approach this channel here slightly differently to other crypto YouTubers. Most crypto YouTubers, they take money from other crypto projects, or maybe they buy into a small crypto project. They have some vested interest and then afterwards promote it on the channel, and then potentially with all of that additional interest, which pushes up the price, they then dump on the following. I never do this. I never promote any individual cryptocurrency that I previously bought. I also never take any money from any crypto project. I try to be as neutral as possible. I try to have no conflict of interest here. Most other channels also don't show their trading history, as in how successful are they. And they're also not willing to share the trades in real time, maybe allow for copy trading. But I'm willing to do this. This is my personal return, so that's the black line, relative to if I had just dollar cost averaged into Bitcoin. That's the light gray line. This is a monthly chart, so this is roughly 4 years of data, a bit less than that. And this outperformance here comes from relative valuation bets, right? We talked about this several times on the channel. Most altcoins tend to do worse than Bitcoin most of the time. And we can make money from that, right? From all of that token inflation. When the insiders dump on the retail investor, when the KOLs dump on the retail investor, when the early venture capitalists, when they get their token allocation and then dump on the retail investor, then there's actually a chance to make money from that by betting on the altcoins to do worse compared to Bitcoin, Ethereum, and Solana. Because Bitcoin, Ethereum, and Solana doesn't have that much token inflation. All those smaller, crappy altcoins do. And so long term, they tend to just do worse. And so I made a lot of that outperformance with borrowing and lending platforms. So I borrowed a bad altcoin and then swapped it into Bitcoin, Ethereum, and Solana. That's how I made this delta. I then moved over the strategy to perpetual futures. I did this for 2.5 months. And that worked out even better. I did this with some experimental money, 40K, and it returned almost 50% over those 2.5 months. Of course, there's some volatility in this, but still 50%. And so as I did this and as I shared my trades in real time with the premium members, I got more and more requests. Can't I just open a capital pool? I deposit to that pool and you do the trading for me. And I finally just started that. So this is now 6 days ago. We started the copy trading vault. It's already up 3.5%, but of course we don't know how this develops long term. We are now moving more capital, but I'm offering this to the annual subscribers of premium. So there's a dedicated tutorial how to deposit to the Bitcoin strategy copy trading vault. That's on the platform called Hyperliquid. It's an 18-minute video. It explains everything step by step. And then you don't have to follow the individual trades that I share, but instead you just get the exact same performance that I get. Both the gains, but also potentially the hard times. Nobody knows how this is going long term. It worked very well with borrowing and lending platforms. It worked very well on my first test initially. And I'm working hard that it will continue to work as I'm trading with your capital. But yeah, you can still execute the trades yourself. I'm still sharing this all in real time in Premium. You can also discuss potential opportunities with the community. Right here are some example trades. But the active approach is for people that don't have as much capital, but that do have some time. So that's for the monthly membership. That's currently at 125 per month. If you don't have the time, then you can simply subscribe for the yearly membership. Then I will send you all the information how to enter the copy trading. And that's for people that have more capital, but of course less time. The yearly membership, by the way, also saves some money, $250 per year. So you're only paying for 10 out of 12 months. If it's your first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.